For the time being, we'll just hop across to our guest who's here, and then we'll come back to you. Now, Dam Capital, they came out with a note yesterday. They believe that South Indian cement companies, they're well placed with respect to pricing, and the industry saw signs of strength with respect to pricing even in September, led by East India. To help us out with how are things on ground, Mr. Radhakrishnan, the whole-time director as well as the CEO at Kesoram Industries, joins us on the show. Hi, Mr. Radhakrishnan. Thanks so much for joining in. After that, we'll also be joined by Navin, Sahadeo, who is joining in to give us his view on his top picks from the space. Thanks, gentlemen, for joining in. Well, Mr. Radhakrishnan, let me come across to you first. There is expectation that there's going to be a price increase from early October. Could you confirm that to us, late September, early October? And what could the quantum be, particularly in South India?
So, good morning, Nigel. So the way we are looking at is scaling up the prices by about 30 to 40 rupees is what we are looking at to scale the prices.
That is in the South Indian market. And what about in Maharashtra? I think you're on the west as well. You have around 50-55% exposure. So in South India, you're saying 30 to 40. In West India, how much?
Yeah. See, West will be closely about, again, anywhere between 50 rupees is what. I can speak for Kesoram. I can't speak for the industry. So far as Kesoram is concerned, this is the price hike which we are looking for. Because the cement industry, as an industry, we have been going through a tough phase after the escalation of cost. Yes, there has been some respite from last year, second half. Now, if you look at again, the pet coke and coal prices are firming up. So,
okay, Mr. Radhakrishnan,
the cost.
Yeah, Mr. Radhakrishnan, just to clear out a couple of issues. First, on the pricing, you're saying 30 to 40 rupees in South India. For Kesoram Industries, that's the price increase you're pushing. And in West India, around 50 rupees. Did we get those numbers correct?
Yes.
Okay. Now, on the cost front, there was some cooling down of cost that was expected. Now, the Dam Capital note suggests that maybe 100 rupees per ton on a sequential basis. That's in Q2 in comparison to Q1. What is your estimate? The cost of production of cement could go down by how much per ton in Q2? And in the second half of the year, how much lower can it go?
So I wouldn't say there is a substantial reduction between Q1. That's not so substantial. Maybe 50 to 70 rupees is what I would see the reduction, not close to 100. And even that 50 to 70 rupees in the recent weeks is getting eaten away with the firmness of pet coke and coal. This is where we are. That's the reason we need to hike the prices.
Okay, got it. Mr. Radhakrishnan, just stay on. We have Navin Sahadeo, who tracks this space very closely as well. Navin, morning. There's been a recent correction in the cement stocks. Is it now an attractive place for buyers to enter? And if yes, in your coverage universe, which are the companies that could be beneficiaries of these higher prices, and perhaps where you may upgrade their EPS and earnings estimates as well?
Right. Thank you. So clearly, the pricing environment is improving. So what we gathering through our multiple channel checks and speaking to various experts is that the pricing environment is certainly improving. I think the expectation is right, pretty much for a substantial hike in South, similar to what we see in East. And it was only a matter of time because East is the extended market for players in South. So if that region has seen a decent recovery, there's no reason why South should be left behind. So coming to my top picks, the way the stocks have run up, I still see very good upside in Grasim Industries, so to say, because not just you get to play the cement story, but also the paint business of theirs is about to start. So that should be a good value unlocker of sorts. And in the mid-cap space, then we are looking at JK Cement as the buy recommendation we have in our space.
Okay, so you're saying Grasim and JK Cement are the stocks you like from the large and mid-cap space, and pricing is improving, especially in some of the regions like the South. Got it. I wanted to understand on the demand front, are you seeing a commensurate, improvement in demand as well? Now that the monsoon season will, be behind us, what is the prognosis over the next 3 to 4 months?
No, demand, I think nobody is really doubting. It's extremely encouraging, given this is a pre-election year. So I think anywhere between 11 to 13% can be a very good demand growth estimate. And we have seen this in the last pre-election year as well as in FY19. Demand grew 13%. So I think demand is not really a question. And to answer, it's not just one or two regions. I think in general, across all regions, the pricing environment is on the mend, or I could say definitely seen improvement.
Mr. Radhakrishnan, just one question. So, we were waiting for monsoons to get over for price hikes to kick in, and that's starting to happen. But is the extreme would you reckon the extreme volatility related to input prices, etc., is kind of behind? It's a more steady cost environment. Demand, as Navin pointed out, is going to be steady, or it's too early to say. What's your sense, sir?
Yeah, it is a bit early to say. I could see there could be some more cost pressure on basically fuel. We need to see how it pans out.
Okay. All right, Mr. Radhakrishnan, very quickly before we let you go, you earlier given us guidance that volumes will do of 8 million ton in this year with a EBITDA per ton of 650 rupees. Do you stick to that?
Absolutely. We see a good volume demand, and Q2 is supposed to be very well. That's the way we look at it. It's going to be good demand, robust demand for the industry in Q2.
All right, you'll be in silent period, but you'll have your results, I think, in the next 2.5 weeks or so. Do we hear something with regard to the refinancing? Because as of now, you're borrowing at 18 to 19%. By the next time we chat, maybe in the next 15 to 20 days, should we hear something on that front?
Absolutely. In fact, Q2, I meant H2 is supposed to be good for the industry. And we will grow robustly in H2. That's the expectation. And refinancing, yes, I've spoken. It is on track. That's what I can say at this juncture.
We'll get more numbers from you when you join. I think your results should be in the second week of October. So at that point of time, I'll press you a little bit more for the refinancing and the debt reduction plans. But thanks so much, gentlemen, for joining in, Mr. Radhakrishnan as well as Navin, and giving us your sense. Pricing is improving, demand is expected to be strong, and input cost will cool off. So that's about the cement space.